Okay, before I get started, what is today? Today is a lot later than I think. Kunar, if it's all right with you, we will have you come on and show us some of your trading techniques next Monday. If that's all right, I'll give you a call this week. Good. All right. I'm feeling better, but we're probably going to have a kind of a short session tonight, only because this stuff isn't completely out of me yet. So what I'm going to do tonight is kind of go over what we've been trading in for the different positions. Um, Brock will kind of figure out how to get around that type of problem. Well, as we can see, we've got this uptrending channel going on in the Dow. Oops, hang on for 1 second. I guess I better. Okay, getting. And today's selling wasn't really anything severe. As we saw during the day, it came down 30 points on the beginning and kind of wallowed in that area for the whole time. So we have to observe the obvious. The obvious is we're still in an uptrend. However, we could have a pullback either to come back down and test the T line, or if we can see there's kind of a trend channel here, and the bottom of the trend channel is here. There's also an interim trend channel. You can go right up the middle. Probably this support level right here. So we could have a few days of pullback, but I think it would be a few days of pullback, not a major reversal. We're not seeing any exuberance in this market yet. Now it came up pretty fast from being oversold to overbought, but we're still in the trend channel. Stochastics are rolling over. Jules, it is if we see a confirmed sell signal. As of yet, we haven't had a confirmed sell signal. Now remember, just because stochastics are in the overbought area doesn't mean that it couldn't stay there for a good 2, 3, 5 weeks, whatever. Okay, let's see. The NASDAQ. Same scenario. Pretty much moving in moving along the top of the trend channel. And as long as we stay above the T line, we just have to kind of give ourselves that very simple analysis. As long as we're above the T line, we're in an uptrend. Can anybody please share the scan language link for TC2000, Telechart 2000, or Candle Saturns? I seems I'm on a different link on Steve's webpage and cannot find them. If you go to the home, or if you go to the website and I guess go to free resources, go down that left-hand column to about the second to the last link in the left-hand column, and there should be formulas for TCNet. Okay. All right. So the nice thing about this slow up moving market is it allows a lot of the prices or patterns to work. So that's what we're going to work on tonight. So anyways, let's take a look at what's going on. Interest rates have pulled back a little bit, but as you can see on the overall scale, this is very, very minor. The interest rates are up there where they're at, practically all-time lows, which is making mortgages very attractive. Let's see, what else I'm going to look at? Crude oil prices. There we go. Crude oil prices may have started right back down again. Came up, did the fry pan bottom, and now broke back the other way. And today, everything took big whacks. Soybeans were down the limit, down 70 cents. Wheat, I don't think it was down the limit, but it was down almost the limit. And corn, the same scenario. Now, corn has this big fry pan bottom setting up. So if it starts showing any more weakness, there might start being some breakdown on the corn chart. And gold held up today. I thought gold and silver would have gotten whacked with everything else, but they didn't. The U.S. dollar has just been kind of cratering, but it did a bullish harami for the first time today. So we'll see what that tells us. All right, so some of the stocks that we've been watching, I've got these not in any order, but at least we can go back through and figure out the reasons why we are buying specific positions. Rovi, of course, started on this T-line crunch, took it up through the 50, and now has had a pretty good steady uptrend from there. HIG is another one that we've been recommending because it had this little flutter kicker signal right here, which is a very strong signal, number one. And number two, it was doing the perfect J-hook pattern. So you had the setup for a new move out of a J-hook pattern, starting with a flutter kicker signal. So you had the classic. We had the inverted hammer, bullish confirmation through the 50. Where's our next target? The 200. At the target, we have a bearish harami. Tells us the buying has stopped. They bring it back instead of the T-line, bring it back to the 20. They wallow around in here for a little bit, but then there was that flutter kicker signal that tells us not only is all the resistance gone, but we've got a very strong new trend, and so that's what we're in right now. So I'm showing you these basically to show you what the analysis is for when to get into positions. Not only was this a flutter kicker, but it broke through this little downtrending channel. So you had all the elements of why to be getting into this position. XNPT. I forget where we first started buying this one, but this one has pretty much stayed above the T-line. And any time it comes back below the T-line or closed below the T-line, this is a perfect example that if they turn around and close it back up above the T-line, you buy it right back. Because the longer this uptrend continues, the more evidence there is that the T-line is acting as support. So there'll be plenty of times where I'll close out a position, but I'll be glad to buy it back as soon as it comes back up above the T-line and starts the uptrend again. And I'm demonstrating this because before candlesticks came along and gave me a platform for when to be buying and selling. If I sold something, I sure as heck wasn't going to buy it back because just had too many emotional or too many emotional factors, yes, that if I sold it here, I sure wouldn't want to buy it back here because if it went right back here, boy, would I look stupid. Now at least I know that when it comes back up above the T-line after coming back down below it without any great conviction, that we're probably still in an uptrend. ARNA would have had you out of the position, but now having you back in the position. There's a bullish engulfing, doji, close above the T-line. I wouldn't be afraid to be buying this one tomorrow. We're still with the anticipation that this could get up here and test this level without too much effort, which would be a good 40-50% profit. And we've seen BONT. BONT has just been a moneymaker for us. Coming out of the fry pan bottom, not able to get below the T-line, does a sell signal. Took off half the position here the other day with the idea that if it started trading lower, it would take off the other half. But it's kind of held up. And so what am I anticipating with a doji right here on the T-line? If I've come out of a strong price move, I'll be ready to buy back the other half on a positive open, telling me the J-hook pattern's in progress. Now, again, this is all kind of developing a trading plan that kind of keeps your emotions out of trading. And the half position, at least I can be half right or half wrong. I can live with that a little bit better than being completely wrong. So if I sold out the whole total position here, then I'd been worried if they'd taken it right back off. But now I can see that when I should be buying back in. And I can see when I should be getting out of half a position. If it opened lower tomorrow, I'd be out of the trade. Let's see. SMBL made good money for us on the move up. Now it's pulled back and did a gap up from a doji, what I would say was close enough to the 50-day moving average to say that was bouncing off the 50-day moving average. But now, would have bought it today had it opened positive because it would have been confirming the signal and it would have been breaking out through this downtrending channel. However, it opened lower, so it didn't execute. But I'll still be buying it if it comes back up through this level. Because that tells me that this signal is still in control and that this level is not acting as resistance, and I'm in wave 3 if this is wave 1. And ALNY is just one of the many fry pan bottoms that have been working extremely well during this market. And this is a point that you all should probably write down in your notebooks, saying play the patterns because they're going to give you much more upside potential with a much easier guideline. Hold on 1 second, please. Bah. Can't tell which one's the solicitation calls. Anyways, if this breaks out, now we already know we're making money on this move because it was probably going to head for this level. Now it seems like this level is not acting as resistance. We should have some more upside. And the more upside should be this type of move right here. So if I have my druthers, I would rather play a pattern because I know where to get in, where to get out, and that if it works, it's going to produce a much greater percent return than just a regular uptrending stock. VCH in this in the T-line crunch, it opened right today. It better open positive and trade positive to stay in it. If it opens lower, we close out the position. Is a T-line crunch the best entry? HPQ looks like it is close to breaking from one, doesn't yet. Okay, that's HPQ. Yes, yep. HPQ. It's still in the fry pan bottom, or I'm sorry, the T-line squeeze. So you stay with it until you see that it doesn't stay above the T-line. Let's see, what was a CFX? I can't remember when we recommended this one, but this one with a sharp pullback. This is a case where, depending on what the pre-market futures are showing, that if they opened it lower, it should have come out of the position, and then you could always buy it back here. And I think that's what I did with this one, is we closed it out, but we bought it right back again. Lost your graphics. All right. Okay. Santa. This one you stay with as long as it stays above the T-line. Now, you've got a very good entry point tomorrow. If this opens positive, you can buy immediately because you're trading off an inverted hammer. When you're trading off an inverted hammer, the probabilities of a positive open going positive is extremely high, like 95% or better. And it makes for a very simple stop loss. If it opens positive, it should not come at all back below the bottom of this you shouldn't come back below the low of this inverted hammer. If you own the stock and it closes above the T-line, you want to stay with it, yes. Now, that's got some contingencies. For example, on CFX, right here, notice how far away we are from the T-line. So remember, our signal is the first criteria. So we've got a doji climbing up in the overbought area. If it opens lower after a doji, which way is it going to go? Down. If you're this far away from the T-line, where do you think it's going to go down to? Probably to the T-line. So why risk it? If it opens lower, close out the position. You've got two alternatives at that point. The high probability is it's going to come back down to test the T-line. If it fails to go through the T-line, you can always buy it back. On the other hand, if it opens lower and immediately starts coming back up, you can always buy it back again if you sold it on a weaker open. But the probabilities, remember the T-line is a secondary indicator. Your first criteria is, what is my signal telling me to do? And if it's telling you to sell, excuse me, and it's also telling you you're a good distance away from the T-line, the probabilities add up to taking profits at that point. You can always buy back in. Santa, what is your trigger price? Greater than or equal to? greater or a positive, just a positive open. It closed today at 7.99. Anything that was positive. If it opens at 8, it needs to start moving positive. If it opens at 8 and starts moving positive, I'll buy it at 8.04, 8.07, 8.10. I don't mind paying for it knowing it's moving in an upward direction. If it opens at 8.10, I'll probably buy it immediately because that tells you they've gapped it up. But then my stop immediately becomes wherever it opened today, which was 7.92. Let's see. Ego was one of the oil firms. This one did a doji today. Still in a nice steady uptrend, but notice how far away we are from the T-line. I'll have a stop right here. Number one, if it opens lower tomorrow, I close out half the position immediately. If it trades back below this level, I close out the other half with the anticipation it's going to come all the way back down and test the T-line. And let's see. ONXX. Just a nice cup and handle. And this is a case, too, where you have that opportunity that if it's coming back down, at this point, this was kind of a hanging man sell signal. If you closed it here, we really didn't need to because you're close enough to the T-line to say, all right, let me hang on to it and just see if it's, there's no sense closing it just to see if it's going to go down a little bit more. So if I'm that close to the T-line, I'll hang on to it, but it better stay above the T-line, which this one has. And what you will find to be a very surprising phenomenon is that if they're in an uptrend, they will stay right along this T-line. Remember, there's very few people that are actually using this indicator, the T-line. Now, there's some people, a lot of people in commodity trading that are using the 10 EMA or the 10 SMA, things close to it. But there's quite a few, or I can say the vast majority of investors aren't even aware of the T-line. So the T-line still acts as some sort of natural bounce or natural indicator because it's nobody uses it. It's not like everybody's watching for the 50-day moving average or the 200-day moving average. It just seems to bounce off of there by itself. All right, this one, don't want everybody to give up on this one. This is SSH, another one that if it opens positive tomorrow, after kind of the inverted hammer today, you want to buy immediately. This one's still a very strong reversal with that flat or fry pan bottom, indecisive trading, doji gap up. The reason I like this one is coming from the 9 or 875 area, wherever we are, I think this could easily get up to the $13 range, a big percentage move. Mako has a very simple chart illustration that every time it comes back to the T-line, they take it back up again. So this is a perfect example of saying, let the market tell you what the market is doing, and they can't get it down through the T-line. You continue to hold this one. HCA has just been kind of a quiet breakout. I say quiet breakout. Quiet one that has worked very well. Could not get through the T-line, and now they've started running it like a scalded dog. So this one's acting well. GPOR, fry pan bottom, had a kind of that little break up here. Now you have a gap up doji. This makes it very simple. Got to stop. One tick below the low of this one. If there's something good happening, it should open higher and trade higher. If this was the exhaustion, they shouldn't trade back down below the T line. Why is the inverted hammer such a good signal to trade? I don't know what the investor psychology of it is that the bears are nervous because they see the price up, but then they're relieved by the end of the day with the price being back down close to the low end of the trading range. But then when they open up positive the next day, the bears say, shoot, the bulls are still here again, get me out of this position. And that's when they start covering their short positions. Yeah, 1 penny, just something below the bottom. And yes, and also you know where on an inverted hammer, you know where the stop loss is. You right 1 tick or 1 penny below the open of that. With a left-right combo, must the left always be a doji and the right an engulfing bar respectively, or are they interchangeable? No, that's the left-right combo is the doji bullish engulfing signal. If you converted it, it'd be well, no, you wouldn't convert it because that doesn't mean too much of anything. That means you've had a bullish signal followed by a doji harami, which would need bullish confirmation. So the left-right combo is the indecision followed by that no, now I lost my train of thought because I read somebody else's. But yeah, there's a great difference between the doji followed by the bullish engulfing signal. That tells you they've made up their decision which way they want to go. John, no. What I'm going to do, and which I've promised people when we did our last stop loss training, and I better write this down again, is I'm going to go through. Now, the stop loss is pretty much intermingled with all the information in the books, but I'm going to go through a specific stop loss scenario for each of the major signals and the major patterns, so that they're all concise in order. And then the next time we do a stop loss session, we'll walk through those and so they're clear on each one. Let's see. S.SSH. I don't know, what was it on the that's more of a little doji here. In either case, a positive open, you want to buy immediately. And that's the problem. That's why having more than one feed source is always good, because as you can see, these charts are a little bit different. Let's see. Flashcards for stop losses. Probably there wouldn't be enough of them. I'll just do kind of a video for the stop losses for everybody. I know, Betsy, I hate when that happens. How would you analyze the candles for CL, which is crude oil? It has bounced a few times on support of a long-term trend channel. And am I looking at the right one? Colgate. Yep, S.CL. First of all, the first thing that would strike my eye about trading Colgate is that over the last 3 months, it's gone up about 3% a month. That doesn't make it a very good trader. Right now, if you're looking at it coming back up to the top of the trend channel, you're looking at a 4% move. This is for the institutions to stick away for years. And, yeah, I wouldn't, yeah, to even analyze it is like watching grass grow. I'd find something more exciting to trade. Even with the calls. I mean, there's much better places to be trading. And you're trading a sideways, unless you're trading, collars or something. Yeah, this is about as unexciting as I've come across. All right, let me get through some more of these just so we know why we're buying some of these. XL looks good. Kind of had the T-line crunch. It took it through the moving averages. But notice the typical move. Nice little bullish signal here. Hits the first major moving average, pulls back, then goes through. So and it's probably got this gap to fill. So once it fills that gap, that's when you start watching for the profit taking. You have the channels showing to us? Huh? Do you have the channels showing to us? Jules, you'll have to ask that again. Oh, trend channels? All right. Well, trend channel is just where you can see that there's been a top and a bottom. Usually, you can pretty much to me, that's kind of a trend channel. It doesn't have to be exact, but it's what everybody else is watching. Okay, this is GITV. This one you stay with as long as it stays above the T-line. Now, it did a doji today, so it needs to open positive tomorrow to stay with it. And CENT, we were in and got whopped out of it. But now it looks like it's trying to come back again. If this comes back up above the T-line, you might look at this as a kind of a sharp J-hook pattern. In HGG, S.HGG, nice fry pan bottom, broke out through the 50. We're in no man's land. I think you hang on to this till at least the 200, as long as it doesn't go through the back through the T-line. VIP's been making us some money. That little fry pan bottom breakout, there's your left-right combo, doji, bullish engulfing. Now, we often profess that if you see a bullish engulfing signal in the overbought area, start looking for a sell signal. The only time that does not apply is when you see a left-right combo in the overbought condition. That usually tells you, after some indecision, they've told you where they're going still up in the overbought area, which is usually the next leg up. So you continue to hold this one until you see a close below the T-line. If it opens lower tomorrow, you close, and it comes down through the T-line, you probably want to come out of the position. Doesn't mean you stay out, because then you watch to see if it does another J-hook pattern. When is an inverted hammer a bullish signal? And when is it a bearish signal? It's always a bullish signal. An inverted hammer looks like an inverted hammer, but if it does it up here at the top, then it's a shooting star. CDE has been making a good return for the portfolios. Another T-line crunch, a breakthrough, good strong price move. And Nuance, Nuance, I was going to say, is probably going to be added to our longer term picks. We will have the longer term picks sections set up very soon. It probably would have had something applied to it this weekend, except I felt like death warmed over. So as soon as I get my energy back, we will start putting out the longer term pick situations. If you have stocks that should be looked at for longer terms, email them to me, steve@candlestickforum.com, and give me the story of why they've got a future to them. I'll probably be adding at least one, maybe two long-term picks every month, and that's mostly based on what the long-term candlestick chart looks like, and then some of the fundamentals of why it might be an attractive long-term hold. What is the strongest reversal candlestick? The kicker signals. Do you have a shooting star on FCX? If so, how do we arrange that trade, getting it in and out? Easy. Anytime you see a candlestick signal, like a shooting star, gap up in the overbought condition, if it opens lower the next day, you close it immediately. Or if you see a gap up shooting star signal, remember, you can have a gap up, but it doesn't necessarily mean it has to end up as a signal. But when it does act as a signal, if I saw this happen after a gap up, I would have probably closed out half the position. Because from here, if I've got a gap up sell signal, and it opens higher and continues higher, I'm in a very high risk situation where I've seen a gapping up in the overbought area. I'm closing out half the position. If it opens higher and continues higher, at least I'm in a half a position of a high risk situation. If it opens lower the next day, I close out the total position, so my average exit price is somewhere up here. I will have to look. I didn't see what, yes, this was one that I think we took off half the position. I'm not sure whether, it closed half the position today, figuring it was going to come back down. I probably should have closed out the whole position. Just my number one lesson of investing is, if you don't feel good, don't invest. Because that's, when you're not feeling good, you don't think the same way. Bill, there'll be a combination of using the weekly and the monthly charts as well as the daily charts for the long-term situation, but mostly be the daily, monthly charts that we'll be working with. When can we enter a bearish position? When can we enter a bearish position on FCX with a shooting star? Oh, when can you enter a going short? Do you find your prospects from TC2000, this room, elsewhere? Do you ever look at inverse ETFs as well? Yes, 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 and yes. Well, maybe one too many yeses. Yes, most of my scans are from TC2000. On top of that, this room probably gives me about 50% of the ticks now that look good, because essentially we've got 300 pairs of eyes out there. Not 300 eyes, 300 pairs of eyes, 300 eyes out there looking for the same setups. And then, yes, look at the ETFs. If I think the market is in an uptrend like we are, and just hypothetically, say they gapped it up tomorrow, and then all of a sudden started bringing it back down to where there's a huge bearish engulfing signal, I might not be ready with any short positions, so I'll short the or buy the short funds, and probably the leveraged short funds. Let's see. Well, suspects. eBay. Yes, that's a Dragonfly Doji, but your stochastic is still heading up, so my suspicion would be they're going to open it higher.
YMZ12,
but if they open it lower, where do you think they're coming back to? Probably the
below
T-line.
8
So,
do not be long.
depending on what you're
YMZ12.
trading, you have to decide whether you're going to close it out and look to see what to do when it comes back to the T-line. GRPN is not what you like, but first thing you have to realize is there will be down days in an uptrend. So the next thing you ask yourself is, what type of signal is this? Anybody tell me what type of signal this is? Not a signal. All right, so number one, it's not a signal. Number two, did it occur in the overbought condition? Well, that'd be iffy. It's not in the overbought condition. So to me, this is just a down day in an uptrend. I would suspect that we're still in an uptrend. All right, we did SRPT, right? It doesn't come up on this one. That's goofy. Yeah. NTE. Might want to look at this one. There's a doji gap up, J hook start. Definitely want to watch this one. This probably will be on the picks. Yeah, Geoff, there isn't a half Hiromi, half engulfing. Remember, if the Japanese race traders thought that was a signal, we would be looking at it today as a signal. But in 400 years, they didn't have any name for that or any reason to show us that as being any type of reversal signal. PRCX, another doji gap up to the T-line, very simple. If it opens positive, you want to be buying it immediately. All right, the fry pan bottoms are what are making you good money right now. These are the things that we're looking for, these breakouts that are producing big price moves. And the big price moves are coming from the fact that there is nothing out there in the market that is showing there's been a drastic change of investor sentiment. Let's see. Hold on for 1 second. That's just a fine howdy do. So, again, here's a situation where these prices are going to start moving more dramatically, breaking out of a fry pan bottom than if you're just buying an uptrending stock during an uptrend. So there's a lot more force that comes into these prices or these price moves when you can see this coming out of a pattern. ASGN. Exactly what you want to be looking for. When they break out through a resistance level, that tells you there's new force coming into them. GRFS. This one you can be looking at picking up, especially on a positive open tomorrow. And BDSI. Another nice fry pan bottom. I wouldn't be afraid to be buying this one on positive trading. Remember, these biotechs just need one little wrinkle in them to get them moving, and they can move big time. Martin, let me get to that in a minute. LVLT, yes, we're still in this one because it hasn't produced a signal. Now, it needs to open higher and trade higher to stay in it. If it opens lower, I'll close it out because I know where it's going to, and I'll just buy it back again if it supports on that level. ALKS. Another fry pan bottom setup. Notice how they can't get this back below the T line. Wouldn't be afraid to be buying this one, especially if it starts breaking out through this level. And ALJ. Not so much a fry pan bottom. This one's got a good looking chart. Try to break through this resistance level. All right, just a few more. GWRE. Another J-hook pattern in the in setting up. Jules, you can't really scan for a fry pan bottom. It's something that's why our eyes are much better than scanning devices or computer programs. All you have to do is see one developing, and you put it on your watch list. Now, on days like today, let's see, BSFT. On days like today, this one shows up on the scan because it's a big percent price move. And now we see that we're up in the overbought area on a big percent price move. Our first inclination is now. We don't want to be buying at that point. However, if we can see visually that this is coming out of a fry pan bottom, that tells us a completely different story. We want to be buying on this exuberant breakout. Oh, gaps, I forgot. Let me see if there's anything in here before we get finished. Left-right combo, scoop or J-hook type pattern, CBYX. That's a good one. All right, for the new folks, belt holds are when they trade way out of the trading range. Notice this is heading down, then they gapped it way down and brought it back up into the trading range. Now, this could have been brought up if it closed halfway above this candle. It was a belt hold, piercing signal. If it closed up here, it would have been a belt hold, bullish engulfing. But the fact that they gapped it way down below any of the trading range tells you whatever sellers are in here are completely sopped up. They're taken out, and then the bulls step back in. So what does that do for us? It tells us immediately there's no more sellers in the way, and it starts a strong uptrend. Hold on for 1 second. Okay, sorry about that. Somebody giving me a Tuesday night call on Monday. So anyways, once a belt hold is set up, it's taken out all the sellers. The trajectory of the next move will be pretty strong. And we had that occur in NKTR not too long ago. There was a belt hold piercing signal. Remember, the further they gap this down and create a signal, the more compelling that they wipe out all the sellers. And a J-hook pattern. This one's setting up, CLDX. And as we can see, there's a lot of strength coming into the small biotechs and those type of stocks. So this one I wouldn't be afraid to be buying on a positive open tomorrow. Excuse me. Okay, let me see what I've missed here. I was going to let's see, Mike. I don't use Bollinger Bands. I think the T line is probably a combination or a derivative of the Bollinger Band, and it works a lot more effectively. So why I'm here, that's what we had John Bollinger on a few months ago. Is he somebody we'd like to have come back? All right, I'll see if he'll come back and do a session. Now, he even admits that the Bollinger Band is not something to use for executing trades. It's just for analyzing whether your existing trend is still working. What if we can't watch the market during the day? There is a stock that you say to close if it opens lower. Should we place some kind of stop or just make the call the next evening? Each night, if I'm trading anything, I have an area that I know it shouldn't come back to. It might be, just to be safe, it might be a bigger percentage away from where I'd normally put a stop. But if I can't be here to watch it, that's probably part of the give and take that you have to give up for not being able to watch the market every moment, every day. So essentially, yeah, you pick out a place and put a stop that tells you this is not where this price should be moving if I'm holding it long. Yeah, there's Cratchit. Once you buy a stock, how often do you follow up? I usually try to do the follow-ups. What I've done recently is that we've had so many long positions on that if there wasn't any change in the previous night's analysis, that the only ones we did was the ones that did have a change in the previous night's analysis. If we are always long, even in the market corrects to the 20, are we always long? No, not necessarily. That's why I'm saying you should probably have some short positions on. Yeah, I'm still short ABFS as long as it stays below the T line. And I'm not sure whether I closed out STX or not. No, I closed out half the position, and I meant to put on the other half position. If it opens lower tomorrow, I'll re-short STX. Jules, guys, Brian, I hope I answered your question well enough. Yeah, the problem we have is, not we have, but one of the problems with trading the market is your decision-making process is a function of how much time you can spend with the market. So if you can't spend very much time, obviously you're going to give up some profits or have to make your stop losses a little bit different. So you can always come up with a formula. Whoops. No wonder I didn't scroll fast enough. Let's see. You can scan for X number of previous days in a range and current. Okay. Oops, I must have scrolled backwards. Tina Logan, okay. I'll give Tina a call. Ask that Scott Andrews present a redo of his study based on 8 EMN trigger. All right. Do you have a comprehensive presentation on trading gaps? Yes. In our products area, you'll have gaps at the bottom and gaps at the top. And we will do another session on gaps. I'd go into it tonight, except I don't think my throat is going to last long enough. Let me see what the schedule is. Gaps are a high profit method, especially with candlesticks. I will see what we can schedule before the end of the month on gaps. We will probably have a 2-hour session for scanning, and it'll probably be on a Saturday morning. It'll probably be a paid session for non-members, free for members. But it'll probably be a 2-hour session on how to set up your scans and how to analyze when you've got 30 stocks, how to go through the analysis of which one's better than the rest so you can come down to 1 or 2 that are the best. Do you put any importance on a stock that is up on a down day? Yes. Especially if your chart is showing a good chart, remember the charts are the cumulative knowledge of everybody buying and selling during that specific time frame.
YMV 12.
So it acts
Price
just
above
like your
18 AM.
visual.
Do not be short. YMV 12.
What do I want to say? I can't even think of the word. I'll think of it, Sarah. Your visual relative strength. That if you see a stock with a good stock pattern heading up and the market's heading down, that you can immediately imply the relative strength of that position is doing something. How do you find that? Do you find you make a larger gain on short positions faster? Not necessarily. Now it works pretty much the same, because even in a downtrend on a short stock, now you will hit some big ones. When we do the rollovers, they usually are indicating there's going to be kind of a flush out, and that's where you get your big profits on the shorts. How much do you rely on the scans from the website? How much do you rely on the scans? How much do you rely on the scans from the website? John, expand that a little bit. How many percentage short positions do you have right now? I've got 2 short positions, they're 1.5. I'm short ADFS and I'm at a short half STX. So I'm short probably 15% of the portfolio right now. Does anybody know what charting packages allow the addition of intraday intensity study that John Bollinger mentioned? Oops, I don't know. Harry Boxer, all right. Excuse me. Harry Boxer. Does he have a website? Are we using the 2 EMA yet? No, not yet. The 3 EMA is probably going to be our one we're going to use. Can we get free access to the GAPS video? That I don't know. I'll have to ask Pat. I think some of those are reserved for packages, free to members when they come out. Can you do picks tomorrow? More important, can you get some sleep? So I'll be ready tomorrow. I got a brand new bottle of scotch and pills. Cheryl, that's also what we want to know. We do have people that we bring in here to teach, and they're based on hearing hearing good reports about them. So if you hear something that I've mentioned a few names in here, and I've had people give me feedback that they've lost money or they didn't like doing business with that person or that group. So we've kind of nixed a few of them. But we try to keep good quality people coming in. And occasionally there's a frog or two. But that's part of my marketing program, that if we get a frog or two, maybe you'll see how wonderful you're being trained when I'm on here. Let's see. When will we know for sure about the scanning webinar? Probably within the next 7 days, we'll have it on the schedule. Yeah, we'll have Metastock back here to Jeff Gibby. Would really like if a session on scans could include some references to free charting packages. I don't know whether there's too many free charting packages out there, unless somebody else knows of any. I know Big Charts is free, but it's delayed. I know there's a few delayed ones. Okay, Kunar. Somebody email Harry Boxer's website to me. Oh, there it is. The Tech Trader. All right. Have I missed the end of day strategies for workers on the majors? I don't know what that means, Jerry. Yeah, I got NyQuil. I've got, that's right, Johnny Walker Black and NyQuil. Okay, who's got my mouse? ONTY. This one, you just have to be careful. I would probably use any trading below yesterday's open as my stop. If it came back down there, that would imply they're coming back down to test the T line. Okay. We'll try to have Kunar on next Monday. Okay, Toss has good stuff. Okay. All right. We're going to do the double line, but try to keep your request tonight to one stock. I'll probably get to most of them. So, Jim, if you'll do the double line. Whoops. Even that's is scrolled right past me already. Okay. Go back up here. All right. We did CLF, I think. Whoops. That went into Never Never Land. CLF was whenever you see a gap up, shooting star, and they open it lower the next day, close out at the position. If you see a shooting star after a gap up, especially that close to the overbought area, you want to take some off, because the probabilities are a gap up in the overbought area, candlestick sell signal, you're going to see a reversal. So this one you should be out of. It should have been out of half of it yesterday, out of the other half on the open today. Now, that's just to protect your profits, because we anticipate it's coming back down to the T line. We don't know whether it's going to go down here. You can always buy back in on a positive bounce off the T line. Johnson & Johnson is one of those that I would not be trading only because of the lack of magnitude of price movement. Right now, it's moving so sideways I wouldn't even want to be in it long or short. Here's another one, Royal Caribbean, where they gapped it up. When it came back down through the low, I would have been out of the trade with the anticipation they're going to come back down and test the T line. Let's see, we did HCA. You like HCA, what about THC? THC, let's see. the Russell 2000. Oh, kind of. This one, yes, is still a good-looking chart. This one you continue to hold until you see a sell signal. DJI flattened out a little bit. DJI. It's flat enough that I wouldn't be in it long or short, but I would put a buy stop up here at whatever this is, 22. If it comes up through there, that means they've broken out to the upside. MDRX, another one. Yeah, another one with that much space and opening lower. I would have probably closed out some of the position. Anticipating coming back to the T line. Now, I say that because people are having problems with, they've bought right here and they've come out here. What had been a good profit, now they've given back a third or a half of that profit. So that's why you still let the signal be your first criteria. The T line is just a support level. So it's what's trading down 10% after hours. I missed that, Jennifer. MIPS. MIPS is another one that was on my list. That nice J-hook pattern. This one can be bought. There's your inverted hammer, bullish confirmation. LVS. This one, just be careful. You've had the gap up. You've had the shooting star. I would have a sell stop right at the low of today. If it comes down through there, they're taking it back to test the T-line with the anticipation that was a test of the 200. And they're coming back to try the T-line again. NCT is another one that today kind of had the wind taken out of its sails. If it opens lower, you're out of it. And then you put your buy stop just above the high of there. If it comes up through there, you know they're taking it back up again. There's a lot of times that I'd rather give up profits that I might have had to improve the probabilities that I'm in the right trade at the right time. So there's a lot of times where without it breaking out, it might move sideways or just waffle in here for another 2 weeks and my money's tied up for 2 weeks. I'd rather lose a few cents of paying up for it, knowing that it's going to be moving immediately. What was that? Smith & Wesson. Smith & Wesson you stay with as long as it stays above the T-line. Now, the T-line is right here, so that's usually a good indication that they will be taking it up, bouncing off the T-line. Bouncing off the T-line. Okay, Apple. I think Apple was up after hours over 700, right? This one you continue to hold until you see a signal. And Goog. This one you stay with. Now this one needs to get up above this level. You can see there's starting to set up a little resistance level. It needs to get up. So this one is going to be most effective if it opens positive tomorrow. LQDT. Nice little J-hook pattern. I say nice little J-hook pattern. This is one of those where when you're in an uptrend and then all of a sudden they slam it and then you whip it right back up, they're going to get right back into the same trend. So this one, if it opens positive tomorrow, would be a buyer and stay with it as long as it stays above the T-line. Facebook. Facebook. That's the proverbial, once it hit the resistance level, they started selling it immediately. So I will take a moment here to say that if you see something that has a target, and you can tell from the stochastics that by the time it hits that target, uh-oh. Excuse me. But if it gets to that target, especially if they gap it up, take off half the position. Because if you can see where the target is, everybody in the world can see where the target is. There's going to be people taking profits. Again, the worst case scenario is you sell half a position and they take it right through. You can always buy back because that's a completely different story. SGI. Whoops. Let's try this. S.SGI. Left-right combo. This one you can be buying on positive trading tomorrow. AONE. There was your big inverted hammer. I think you're in a stutter step. If this opens positive, you buy immediately. You do not want to see it open lower and trade below the T-line. AMD, was there news that the CEO resigned today? Anyways, this one you stay long as it stays above the T-line. DEC did not execute today, but notice what it did do today. Came right back down, used the T-line as support, bounced back up. Be ready to buy this on positive trading. What it's basically showing you is once they broke through the 50, they can use the 50 as support. Where's your next target? Up here at the 200-day moving average. Let's see, we did MDRX, I think. MDRX. Yes, that one you should have come out of today and be ready to rebuy it if it supports at the T-line. USO, like oil, that one broke down at a major resistance level, so that may be backing off to the 50 for a few days. TCL, this one you stay long as it stays above the T-line. Glue, got a good looking chart. Not a strong reversal signal, but you do have this kind of little rounding pattern. So this one I would buy using the halfway point of this candle as your stop. And Sprint. This one you stay with as long as it stays above the T-line. GMCR. Excuse me. Oh, where's that scotch when you need it? This one, look for it to pop. If it opens positive tomorrow, probably your T-line will be come up through here. You definitely want to be a buyer because they're going to take it up to the 200. Maxwell, let's get this bigger. Another one that didn't do a sell signal. You stay with it as long as it doesn't close below the T-line. Caterpillar, if it opens lower, it's coming back to the T-line. Bidu. You're still in the early stages of this uptrend, but with it pulling back today, look for a stutter step for a couple of days of indecision, and then they started back up again. Can I get the VIX over here? Yes. VIX. Apparently not. I don't know how to get them over here. International paper. Ooh, that's interesting. That looks more like the skyline of Houston. International paper, yes, you want to be shorting this one on weakness. I might even recommend shorting that on weakness. ECYT. This one, as a trader, should have been closed out today because it closed below the T line. Over here, you had indecisive trading that was trying to take it back up, but today told you they weren't going back up. This one should be closed out if you're trading it. You can always buy it back if it comes back up through the T line. Did Johnson & Johnson, BCOR. Another nice fry pan bottom breakout. Consolidated today, came back up. It needs to open positive tomorrow to stay in it. Okay, AMD is down 7.5% after hours. All right, thank you. PCS, this one you continue to stay with. This has been a good little moneymaker also. Came out of it over here, but got back into it. Nice uptrend ever since the kicker signal, and then you're basically on a 45-degree. A-log. This one you continue to hold. Probably would use the open as your stop, but as long as it stays above that, I would suspect a 45-degree off of here. We did DGI, H-band. All right, if this one opens lower tomorrow, obviously you close it out. It's coming back down to the T-line at least. AIG. AIG's also got this problem of trading too flat. Tomorrow to own it, it would have to have a strong day getting up through the tops. Otherwise, I'd find something else. Now, it did have a strong buy signal right off the 50. There's your left-right combination followed by a gap up. But as we can see, we're stuck in this range, making it where I would consider it not profitable because your money's kind of just sitting there sideways. Amazon, you stay with as long as it stays above the T-line. If it opens lower tomorrow, you're out of it. Office Depot. Did a dark cloud today, not a dark cloud, but a dark candle. It needs to open flat and start trading higher. If it comes back, then you got to be careful to see whether it's going to come back to the 200 or come all the way back down to the T-line. So if it opened lower tomorrow, I'd close out the position. You could always buy it back if it starts back up again. Ford, stay with this as long as it stays above the T-line. NBR. Another one that's probably going to come back to the T-line. So if it opens lower, you take your profits and then watch for the T-line crunch. We did USO. I should get out of EA if it opens lower and see if it bounces off the T-line. No, you're already bounced off the T-line. All you want to see tomorrow is that it doesn't trade back below the T-line. It needs to stay positive or stay above the T-line. CENX, in the same scenario, if it opens lower, you come out of it because that's where everybody else is going to be coming out of it. Then see if it supports at the T-line. U.S. Steel. This one has to open higher and trade higher. There's that, what they call the meeting line, where they bring it up, they gap it up and bring it down. That's right to where it basically closed the night before. Open it lower, that's a sell signal. So the only way to stay in it tomorrow is that it opens positive and trades positive. Here's Las Vegas Sands. NYX. If this opens lower, you take profits and then see what it does at the T-line. MTW. Same scenario. Needs to open positive, but notice you were relatively close. And this might be what you call the double doji. So if it opens positive and starts trading positive, you can be a buyer immediately. CMG, there's the 45 degree. Stay long as it doesn't close below the T-line. Bank of America. This is one where you should have closed it out on a lower open today. Notice how far away you were from the T-line. If you're still long, it has to open higher and trade higher. If it opens lower, they're bringing it back down to at least the T-line. Let's see, we did Las Vegas Sands, right? Yes, almost touching the 200. Fossil. Stay with it. If it opens lower tomorrow, you close it out. Then you just put a buy stop at today's open. If it comes back up through there, you're back in it. SVNT. J-hook. That one you continue to hold until you see a sell signal. FST, whoops, S dot FST. Another one that needs to open and stay relatively strong. If it opens weaker and starts heading down, it's going to test the T-line, we think. So if it opens lower, close out the position. You can always buy it back if it starts showing strength before the end of the day. Hershey. Yes, if this opens lower, that's kind of that rounding top that you want to get ready to go short on this one. Short in CLF. All right. Let's see this. That's CLF. All right. But just be careful of you're right back to the support levels. Goodyear. This one has to open higher and trade higher so it doesn't come back below the T-line. JP Morgan. You don't want to see it trade below today's low. If it comes back down through there, close out the position. So you do not trade any of the slow and steady blue chip stocks. Not trade them, no. Those are things for the big institutions. There's 7,500 trading entities out there, so if I'm going to spend my time and making a living, it's not going to be trading the Johnson & Johnsons and the Cloroxes and Procter & Gamble's. They move too slow. There's always good charts somewhere. Okay, AMD trading down. All right. All right. Asia is up. How do you know when to short versus just slight pullback? Short will give you usually a very strong sell signal. A pullback will not give you a sell signal. It'll just be selling. Use today's low as your stop. If it comes down through there, they're pulling it back. And let's see. GDOT, this one you stay with as long as it stays above the T line. AMD down 10%, which is 40 cents. Well, the first thing you need to realize that the reason you were in this is because of the signal. Now that signal's negated, get out of it and move your money someplace where you can read the chart. Goldman. If this opens lower tomorrow, you close it out. You can always see what it does when it gets to the T line. I don't know, what was VXX? Apparently it didn't miss it because I don't know how to get it over on this chart system. Is the T-line crunch as good a pattern as the J-hook or fry pan bottoms? Yeah, it is. I mean, again, it's not like we're learning 30 patterns. We're only learning maybe 7 patterns at most, with the fry pan bottom and the J-hook being the most predominant. The T-line crunch is just kind of a derivative of the fry pan bottom, where you can see a slow curve that's staying above the T-line and then being pushed out through. What are we looking at here? Looking out, or pushed out through the resistance level. So, all right, with that, I'm going to go make a cup of hot tea with plenty of honey. So, anyways, everybody have a good evening. We will see you in the chat rooms tomorrow.